Welcome back to another video. Today we'll talk about PayPal stock, ticker symbol PYPL. I think many people are looking into investing in this stock because it went down by 32% in the last year alone and 81% down from all-time high on July 2021. I think everyone is hoping that they can get in and have a position when the stock is at the bottom and hold it for a while until the stock comes back to its fair value. So the question, did we hit the bottom or the stock will continue to go down even more? Today I will make the case for my opinion that the stock has not reached the bottom yet and it will continue to go down for a while. Before we continue, I want to remind you that this video is not financial advice and for entertainment purposes only. So generally, there are two reasons that drive the stock price in any direction, either news or fundamental. So if the company has too much negative attention from the mainstream media or the social media, the stock will go down because fewer people will be interested in buying the stock and even maybe more people are dumping the stock. So the lack of demand by itself will drive down the stock price. Or the other reason, that the company is not doing well financially, either because that they are not doing well from their operation perspective or financial structure perspective. This makes informed investors revisit their analysis and give the stock a new valuation. In my opinion, the fundamentals are driving PayPal stock down and the news is following that. Let me explain with numbers. In the last quarterly report, which is the second quarter of 2023, we can check their financials for the first half of the year. In the cash flow statement, the operating cash flow is $970 million versus in the first half of 2022, the operating cash flow was about $2.4 billion. In other words, the operating cash flow went down by about 61%. And if you ask why the operating cash flow is very important, because the free cash flow is the operating cash flow minus the capital expenditures. So the free cash flow in the first half year is $970 million minus $320 million, which is $650 million, the free cash flow for the first half of 2023. Dividing that by the outstanding shares, the free cash flow per share is 59 cents. Let's assume that the second half of the year will also yield 59 cents, making the free cash flow per share for 2023 $1.18. Let's give PayPal the benefit of the doubt and assume that the free cash flow per share at the end of 2023 is $1.70. So we're being optimistic about the free cash flow per share. If we don't discount the free cash flow per share and use 5% return investment ratio, the intrinsic value is $34 per share. And even if we push the free cash flow per share a little more to $2, using a 5% return investment ratio, which is the minimum by the way, the intrinsic stock value will be $40 per share. And since the current market stock price is $55.75, in my opinion, we have not hit the bottom yet. And the next couple of months will be very interesting for PayPal stock. If you're interested to see the complete analysis for PayPal stock, please check the video right after this one. Thank you for watching this video to the end and see you in another video.